his likely kind of tax cutting agenda vis-a-vis the prior governments. Yeah, perhaps that's what's creating a little bit of a destabilization in this, what was a previously pretty robust demand for treasuries. So maybe the treasuries just aren't, the appetite isn't there. Central banks have money, they need to stick it somewhere. A lot of it's finding its way into gold. You see these gold reserves from China being pumped up every month. I think it was 8 tons, I think, last month. Kazakhstan. I mean, you can go through a list of basically every country.
China's heavily investing in gold at the moment, correct?
And this is why we get some nice moves in the small hours of the morning. So we had a really big pump. I didn't see if there was a news event that catalyzed this, but at midnight, bang, we had a big rally. We've seen a lot of the big moves this week on the upside have tended to be more in the morning.
Yeah.
And then the weakness has come on Tuesday last week in the afternoon session. We had a big sell-off in the US session on Thursday. So you tend to get a bit more life to the upside in Asia. And then the vulnerability, if there's going to be some, tends to come in the European and US sessions. Look at the 120 open on gold, and already it's just been slotted for, what's that, 64s down to where we reside now, 54s with $10 off in the 20 minutes or so since the open. So yeah, if you want to be long gold, it's probably worth kind of buying it into the close, or maybe getting long in the wee hours of the morning if you can get up at those times. Sadly, I value my sleep too much.
So does that mean the bond yields are down at the moment? How are the bonds doing?
Well, I mean, there's a dollar story as well, right? So if you want to maybe take a look at the dollar before we get to the bonds themselves, because the bonds have got a lot of themselves going on, but the dollar story has been fairly clear this year.
Yeah.
The gold priced in dollars, if dollars are going to decline, gold's going to appreciate.
Course,
but this inverse correlation has really got out of whack. If you can overlay this on a different price scale, you'll see like the acceleration here on gold really hasn't come when the dollar is accelerated to the downside. The big acceleration lower in the dollar was through March into April, right?
Yeah.
All the tariff stuff. And gold did well, but gold has done better since the midsummer than it did then without the dollar needing to decline. So if we do get another leg lower in the dollar, my God, maybe it's not 4,000 we need to be targeting on gold, which, by the way, we're not too far from now, within less than $50 away. Feel like that might print this week. You'd be a brave man betting against that. But it's not necessarily a dollar story. Bond yields, I mean, let's look at the 10-year. We've got bond auctions this week. 10-year is out at 6 o'clock UK time. I mean, the correlations here on the yields aren't quite as clear as they are with the dollar. And there's a global bond yield kind of story, obviously, in the UK. If you look at the British bond market, the UK 10-year, we are very much punching into highs, and were even at the start of this month or very close to them. So, yeah.
That's promising, right? The UK?
No, you don't want high bond yields.
Okay.
No. This is a fair trade. This is that we cannot afford to do the things that we are promising. So we need to borrow, therefore, money from the markets, and the people who are going to provide that money to the government, they say, well, hang on a minute, if you can't make ends meet yourself and you want to come to me to lend you this money, I'll lend you it, but you have to pay me more money. So that's how a bond yield kind of gets reflected higher. So it can be a function of interest rates. Interest rates in the UK have been going down.
Yeah.
Remember the cut, pause.
Are they going to counteract this with another interest rate change, do you think?
Well, yeah, the view, I mean, if we look at the story with the UK yields, if I can go to, maybe let's go to the Forex Factory, they have a nice little graphic on this, how the UK rates have been cut. So if you look at the BOE, oops, bear with me, the official bank rate here, we saw a really clear picture on the UK rates. It was cut, pause, cut, pause, cut, pause, cut, pause, cut. Last time we paused, and the view was that this might be the final one, but Bailey kind of insinuated, even the day of this most recent pause, that we have to look carefully about how we go about future cuts. Okay. So the door was then opened that maybe we do get one more to the downside. Who knows? It may continue if we are going to get into recession territory, which could happen. Then maybe these rates really do ease off back to kind of historical levels. I mean, not the zero historical levels that we've been used to, but kind of well, it doesn't quite go back far enough. This is all pretty high inflation periods too, but normally you want it sitting around 2-3% if you can get away with it. Yeah. Maybe we'll get back there if things get pretty nasty. So yeah, I'm not sure we'll get too many more rate cuts in the UK, and even if we do, I'm not sure it's going to have that much of an impact on these yields, because this is more of a you are not making the ends meet. I think what's going to be more impactful on these UK 10-year yields is the budget, which is as late as it can be, but late November. They're doing it, I think, the week of Thanksgiving week, that Tuesday or Wednesday. So when Rachel Reeves comes to town and tells us how the hell she's going to do these, what will probably be tax rises of some description, yeah, then we might see this change somehow.
Used to
but
that in the UK, right? Tax rises.
Damn right. But the bond yields don't like tax cuts either. This was the Truss moment from 2022. We had a period from in the August. We were sitting down at 1.6%, and then 2 months later, bang, we were knocking on 4.5% just because of the budget that she kind of put through. Not solely, there was a big rally in yields globally at that time, but nowhere as big as this. So yeah, unfunded tax cuts aren't great either. So maybe if they can fund the spending with some tax revenue, this might allow this yield to ease off somewhat.
Yeah, so on the other side of the spectrum, obviously gold and Bitcoin are all-time high, and
yeah,
oil's not doing too well, right?
No, Bitcoin posted all-time highs again today. Yeah, let's talk about something that isn't at or near all-time highs.
And that would definitely be oil.
Not too much out there, but oil is one of them. What do you want to tell me about this?
Well, I mean, it's coming close to $60 a barrel, which is apparently you know, not a good level for oil, because of the manufacturing. So I've got like a little. Oh, do you want to do it?
No, lead the way.
Can't see over the thing.
You on here?
Bring out
This one.
Yeah, I think so. That's the one. Yeah. So this is the cost to produce a barrel of oil across the world. You can see in places like, you know, the Middle East, very cheap, but you know, here in the United Kingdom, $53 a barrel.
Not making too much at $60 then.
Not at all. But it's weird because OPEC have kind of announced that they're going to be up in production as well. So not quite sure why they're up in production, considering you'd think that they'd be trying to bring the price of oil up. But they're up in production, and there's a pipeline from sort of, actually got it written down here, from the Kurdish oil pipeline is opening back up soon. So they're going to be producing another...
More supply. Great.
Yeah, 230,000 barrels a day as well. So not quite sure what this means for oil.
Well, I mean, it's excess supply, right? It's more supply.
It seems like less people are using oil as well, because obviously we're looming maybe on a recession, as you said. So manufacturing has gone down, and China's not using as much as it used to either. So
no, the China, you were talking about China earlier, weren't you? The manufacturing is really stalling out there a little bit. It was the powerhouse of the world in terms of manufacturing. It's not quite at those levels. Maybe hindered a little bit by these tariffs, you would have thought too. I think this is going to be almost like a little bit of a proxy war, the oil prices, right? You see that, you know, we're obviously the highest here at $53 a barrel, but the US 36 is, I think their shale production is nearer 60 as well. Like the stuff that's you have to force out of the ground is quite expensive. Yeah. So that if they're hard, I think, as I understand it, at least I'm no oil expert, but these are kind of not easy to just switch on and off.
No.
I mean, I know oil fields in general are not. You can't just turn the tap off, right? It's just going to pop.
No, that's
so
right.
This is what led to the big sell-offs that we had during COVID, which I know you wanted to have a touch on. But yeah, just before we do,
that's why Russia is burning all their oil, because, you know, I mean, India's been a bit of trouble because they've been buying Russian oil. So
well, they can do what they want, right? It's cheap. Why not? They've not put sanctions on Russia.
I mean, Russia do actually produce it for $17 a barrel. So, and you know, so they're definitely, you know, these other countries are definitely making more money, and it seems like they're the ones that are starting to actually pump more out as well. So,
but you do wonder if Russia need to pump it out, because they obviously have this war with Europe.
Yep.
Well, Ukraine, but you know, maybe a proxy war with Europe and the US. So maybe they just need to continue the supply. And this is kind of the interesting thing. Is it the Saudis who kind of want to get oil prices down and they can afford to? I'm not sure they really would want to. You've got to think Russia and Iran want oil prices up because they need to be kind of funding things, certainly Russia these days. And maybe they can squeeze the US a little bit, especially on their shale production, squeeze it out of the market. Yeah, I think this could be a little kind of like Cold War thing going on in the oil market if it does get manipulated. But we are kind of right on the floor here.
Yeah, I mean, compared to, let's have a look at it compared to 2000 where COVID was.
Well, yeah, we'll see some interesting numbers on the COVID move, won't we? Let's have a look here.
So
this is a pretty interesting day.
It actually went to minus
$40. You paid $40 a barrel to take it.
Yeah, exactly that. The reason for that was obviously because these are all future contracts. You'll see on the timing of that. That's near the end of the month. Is that when you buy a futures contract, if you're actually trading in the futures and not like on a prop firm or something, is that you actually have to accept delivery of these barrels of oil, and just no one had space for them. You know, apparently the people were making all the money were the tankers and stuff. There was just loads off the coast just stacking barrels and barrels of oil. And
we're there again. We're at the highs since then now for those floating oil ships are as full as they've been, basically, the offshore oil at the moment, which is also a pretty interesting story.
So even to sell it at a loss, they're still actually better off because it would have cost them more to store it anyway.
Well, there was nowhere to store it. That was the thing, right? The storage facilities were full. Everything was at capacity because remember back to COVID, complete demand destruction for, oil. Airlines weren't flying, cars weren't driving. The demand for oil has never been that low on a week-to-week basis. So with demand at zero and supply unable to be turned off, that's what led to these prices. Absolutely dumping. There's an interesting story about some Essex traders who are shorting into this futures close. It might be worth a little bit of a look at that. I don't want to get myself in any trouble because I feel like they've jetted off to Dubai and
did they catch that move then?
There's a school of thought that they caused it. So
they caused it.
I'm not claiming that in any way at all.
Well,
some people are alleging such a thing, but I would never do that.
Let's not go down that road. No. We might have the Essex boys around here at the office looking to discuss it.
Well, they won't be back in the country anytime soon, as far as I get it either. There was a weird time in the oil market back there. I don't think we're going to see anything quite like that at these levels. But with any sort of commodity, if the price gets so low, then supply will eventually, like from the UK, maybe slow down. We'll have to turn the taps off a tiny bit. And which then will cause a little bit of more of a rebalancing effect. Demand, it's basic economics 101, supply and demand. If demand is going down, as it is, and supply remains strong, well, prices are going to scale lower. If you can also get supply down a little bit, which is what OPEC tend to do, and whenever we get these pullbacks, they tend to reduce global supply. But that's not been their MO of late. They've been quite happy to just pump. Trump's very much a drill guy, isn't he, as well? So
he is,
no one seems to be wanting to be the guy who's like, no, we're done producing this stuff. This is not a bad number either.
As if oil stays low for a considerable amount of time, it also puts pressure on the companies because they have to kind of invest in finding new oil and technology about making their drills kind of more efficient and stuff like that. So obviously that research and all of that side of it will go down as well. So
with cheap oil prices, exploration companies get absolutely murdered, right? If you're not haven't found any oil, who's going to be throwing money at you to go and try and find some when it's this cheap, right? It's a different story when we're $130 post the Ukraine war kicking off, but with it down at 60ish now. Maybe those sort of companies are in the doldrums, but these markets swing up and down. This is not necessarily the chance to short it aggressively. If anything, this could be an opportunity for long-term holders to kind of buy into some of these things because the squeeze is very much on. But maybe we won't find out whether we're in a recession or not because maybe we're never going to get the non-farm payrolls data anyway.
Well,
maybe this is all part of the ruse.
News could be good news, right?
Well, maybe there's a lot of people saying that Trump's trying to just get rid of news altogether. Why have black and white news when you can just have all the shades of grey that he throws around? Because he was already talking, we're getting into earnings season next week, and he, last month was saying earnings, we shouldn't do them every quarter. Let's just do them every 6 months.
Yeah.
It gives people more time to hide things. And maybe we're hiding some of the jobs data that he doesn't want to hear about just yet too.
So as a fundamental trader, what would you be doing for the next, even if it goes on for 30 days, what would you really be doing?
Luckily I'm not purely a fundamental trader, but there is news around. We saw it with AMD this morning. If you want to have a look at things that how to trade news events, we had an announcement through on the Squawk that AMD's deal with OpenAI was coming. Oh, here we go. I need to stick this on the extended trading hours so you can see it. But these things can pump, right? There are trades available to you. Even if you're a minute late to this one, you still weren't doing too badly, right? You only missed about 10% of the 35% rally. There are news events happening. You don't need just economic data if you're a fundamental trader. So there's, tons and tons happening out there. Luckily, it's not just the way that I do it either. Not on this myself. I know some of the guys in the office were, but yeah, I'll still be using the same tools, your option flows and order flows to markets move even in the absence of news. So let's see how they move this week. Likely to all-time highs again on gold, I would have thought.
Yep, that's just going to keep on going up. So don't try and buy the top, right?
Buy the well, they say try buy low, sell high. With gold, you've been doing well, buying high and selling higher.
Yeah.
Certainly wouldn't be a shorter into this market at the moment. I think the market can be irrational longer than you can be solvent, as they say. So yeah, I mean, even if it's overshot, it can overshoot a lot further than you might think it can. So yeah, I don't think it's in the time to be going short on this thing or on many assets at the moment. We're in a rate cutting cycle, it seems, in the US. It doesn't feel we're in the final kind of run up to Christmas. This tends to be good for stock markets, so I'd be surprised if they don't have a nice end to the year. Cool. Pump. Keep blowing that bubble.
Cool. Right, yeah. So is there anything else like you want to cover today, Chris?
Yeah, I mean, there's not a lot on the calendars to really discuss, to be honest, because quite honestly, I mean, we have the non-farm payrolls due out tentatively on Friday. Who knows? We also have 2 weeks worth of unemployment claims due out on Thursday. Probably won't get those. There's a little bit of data. The University of Michigan sentiment will probably get. We've got some rate decisions. I think Japan's an interesting one this week. We've got UADA talking for the first time since this new PM was announced in Japan. So yeah, this could be an interesting morning for the yen. I think that will be a volatile currency this week, as will the euro, with what we've already talked about with the French Prime Minister. But yeah, in terms of hard numbers, there ain't a lot this week, but there isn't normally a lot this week. This is not normally a week for data, right? The week after non-farm payrolls tends to be a quieter one. Yeah, the question then comes, are we going to get the inflation numbers next week, right? These are numbers that, again, we probably need the government to give us. So are we...
They need them themselves, don't they? So
does Trump want this information?
Powell would want it.
Powell will need it. Well, this is the other thing. If they don't get this data, can they then rate cut? Because if they're not getting the data, this is...
They can't do it on hearsay, can they?
So when we get that next rate decision towards the end of October, is it? I think we've got another one I think it might be early November. We scroll out, end of October, 29th, we get the next Fed rate decision. A weird time because the clocks are going to change. We've got that weird week coming in. So slightly earlier off the bat on that one.
Oh, is this the week where it's 2 hours difference?
Yeah, it's starting this week from what I'm told. So yeah, with the shifts happen in the UK on this Sunday the 26th, and they don't happen in the US until the week after. So we've got that weird 1:30 open, 12:30 data, 2 o'clock data, and
so
the earlier
just be careful out there if you're trading the New York Open. Be warned that the clocks are changing. So
we've got a bit of time, but that kind of shows you where we are this week. There's not a huge amount to talk about other than, maybe an interest in oil. If you're a long-term trader, a look at kind of buying long-dated calls or something. That might be something I look at. But if you are having a look at, for economic data releases, you might be waiting with your thumb firmly placed somewhere you can't see.
I know you didn't want to, but we could look at soybeans. Should we have a look at soybeans?
You can look at soybeans.
So I heard on where is it? Soybeans. No. So soybeans are also
it's a 1 minute chart, so you might want to scale out a little bit.
So this was just something I was hearing on Bloomberg. Apparently China have decided, in retaliation for the tariffs, not to buy their soybeans. So soybeans now are at an all-time low. So if China do decide to lift the soybean embargo, we could see some massive movements in the soybeans. Just an interesting story I heard on Bloomberg. So.
Well, yeah, maybe if you're a fundamental trader, you can sit by the news feed and wait for that one. If you're interested, it's not my game. A little bit long in the tooth to be staring at a screen for 15 hours a day. Yeah, I'll pick my moments when I'm damn good and ready. I think that's going to be my look. Yeah,
or you could just buy it and hold.
I'll leave that one for you. It's not a trade that I want to take, I don't think, Russell.
Buy it on the futures, and then you'll have to accept delivery of soybeans.
Well, I hope you're hungry. That's all. But yeah, not too much to say in terms of the news. I mean, the only thing that is out this week of interest to me is the kind of bond auctions as well. We didn't talk about them, but on Wednesday we have the 10-year bond auction. We have the 30-year on Thursday. These could move markets this week. Really, I mean, we talked about the fact that gold is a kind of alternative investment than these 10-year treasuries. So yeah, maybe if the appetite continues to dwindle on these, that might be a really good story for gold. Let's see.
Okay, cool. Well, I think that pretty much concludes it for today.
Welcome to the show. How was it?
It was okay. It was a bit, I normally do the live trading, which is a bit more comical, should I say. I normally hide behind my my comedy, but
yeah, I'm not known for my humour.
Trying to sort of like deal with the realms of seriousness now. So I'll come a bit more prepared next year. Next year.
I hope so.
Or maybe even next week. We might have Clive on next week.
Yeah, I think we're dusting Clive down to have a go at this.
Yeah, because he wants to discuss advanced order flow techniques. So
maybe if we've still got no news and nothing really to talk about, that could be a good opportunity next Monday.
That'd be a great opportunity.
Yeah, well, let's see what we get this week. We might get Non-Farm Friday a little bit later than originally scheduled, but probably not. Good luck out there. I've been Chris Pollock.
And I'm Russell. Take care. Have a good afternoon.